Hi there, welcome to Kneppy Invest and welcome to March 24, 2025. There's about 20 odd minutes left of trading today. An okay day on the market, particularly if you're in the banks. XGR up 0.06%, XBK, which is the ASX 200 banks, up at 1.3% last time I looked. Fairly negative day for small caps and tech, which makes sense now because I was looking at one of my watch lists, which is called the Bye Bye Australia watch list, and everything was in the red. And some of these companies down a fair bit, like Cyclopharm down 9%, Smart Parking down 8.4%, EPX, EP&T Global down 7.3%, Metals X down 4.9% expected. So I sort of was thinking, oh, that's interesting that a lot of these companies are down a fair bit, yet the overall market was up slightly. And then I had a look at the banks. Yeah, the banks have really pushed us higher today. I read something interesting in Market Index today. I think it was an email I received that the breadth has been quite narrow in the rally we have seen on the ASX over the past week and a bit. So yeah, the breadth has been quite narrow, or short or narrow, whatever they want to call it. So we really want to see the breadth. We want to see all companies doing really well during a rally, not just a few of them. So that's what they were talking about in that particular email. Okay, so the agenda for today's video, we'll have a look at oh, by the way, some pretty good news, economic news in Australia. PMI came out and it was the highest for 2 or 3 years. I'll have a look at that if I don't forget. But the agenda for today's video, we'll have a look at the ASX today, look in the best and worst performing companies. Maybe before that, we can have a look at the PMI before I forget. And then we'll have a look at the top 5 stocks of the day, including a company that released half-year results, a company that I am trading, a company that has made a pretty big acquisition. Market hasn't liked that one. A company that lost a CBA contract. Not good news for that company. A company that had a not favorable, it had I think it was a research house initiated coverage of this particular company. And I've noticed, because I get an email from this particular brokerage firm, and whenever they initiate coverage, share price of those companies tend to pop up. Absolutely true for that company. Also received an email. Don't receive many emails. And in fact, I only look at my emails maybe once every 2 weeks. I know. And it's very fortunate that I looked at this email this morning because this particular person, Mr. Peter Ziguros, I'm sorry I absolutely butchered it last name, sent me an email in regards to Austin Engineering and trading in that company during the closing auction on Friday. So that company is in my top 5 stocks as well because it was a really interesting goings-on during the closing auction. Okay, in fact, here it is, Weed A&G Trade email. There we go. And then what else? And then we'll have a look at some of your comments. Yes, why not? Okay, so before we have a look at the ASX today, just this interesting or some good economic news in Australia. So Australian manufacturing PMI at 29-month high. So I was thinking between a 2-3-year high. S&P Global, so up to 52.6. So this is product manufacturing index, and we want this to be above 50. Above 50 means growth. Below 50 means contraction. And in fact, the PMI has been generally below 50 over the last few years. In fact, if you go back 3 years ago, yeah, it's generally been below 50. So between 50 and about 47 over the last few years. And we're starting to see a rise. This is good. And if you have a look at what they're talking about here, new business rose faster as improvements in economic conditions and successful business development efforts spurred high demand. On the other hand, export orders declined amidst weather disruptions and subdued external conditions. So it's really interesting that those two things there, weather disruptions, we have no control over the weather. If you know how we can control the weather, if you devise something, get in contact with me. Yeah, we can rule the world. The person who can control the weather rules the world, becomes the richest person and most powerful person in the world. Will never happen in our lifetime. And subdued external conditions, which again, we have no control over. What we can control is ourselves and how we perform. Anyway, so pretty good economic news from Australia S&P Global Manufacturing PMI. And I noticed, where was it? Oh, yeah, Japan Manufacturing PMI falls to 1-year low. And that, in fact, that's below 50. In fact, the Japanese PMI has been slowly dropping. If you have a look at the last 3 years, it's generally been below 50, which again, is contraction. Okay, so that's all I really want to talk about when it comes to PMI, one of my favorite indices. Metrics. We'll call it a metric. Okay, now on to the ASX today. Interesting day. I did expect a slightly down day. The futures were pointing at a open down 0.5%, and we were initially a little bit weak, but a pretty bad day for small caps and tech. Small caps down 0.87% and tech down 0.47%. But again, that makes sense because I did notice quite a few small companies down today. Now, small caps had a pretty good week last week, so this could be just a bit of profit taking. I have no idea. Now, generally today, yeah, we could say has been going up. You can see at the start of the day or just after the opening, everything was down, and then particularly the XAO and XJO have sort of rallied. I noticed that XTX at one point today was up and then fell. But anyway, let's have a look at the best and worst performing sectors and indices. Financials, pretty good day, and that's been led by the banks. In fact, the ASX 200 banks, the XPK, up 1.55%. Not sure why people are buying into the banks. Maybe it's because of the PMI. It could be as simple as that. But they have been our savior today because if you have a look, and discretionary, we can't leave out discretionary. They've had a pretty good day as well, up 1.06. Wonder why? I couldn't give you a reason why discretionary's had a good day. We could just have a look at companies within this. And no big company is up significantly. However, Wesfarmers and Aristocrat Leisure, by far the two biggest companies within this sector, are up by 1.6%. So that's the explanation right there. Wesfarmers and Aristocrat have had a good day. I'm pretty sure the Lottery Corporation lost their CEO. So I actually expected the share price of that company to be a little bit more down than that. But obviously the ex-CEO wasn't that beloved. TLC, I'm pretty sure something to do with that. The Lottery Corporation, Managing Director and CEO, intention to retire. So maybe the market knew this was going to happen for a while. Okay, let's go back to the market today, the ASX today. So a pretty bad day for materials, industrials, IT, and staples. I would assume staples is down because of Woolies and Coles. They had the favourable ACCC findings last Friday, and today, obviously, we've seen a little bit of selling coming in. So I would say Woolworths and Coles are down maybe between 2 and 3% today. Just guessing. So let's have a look. 1.4% for Woolworths, 1.9% for Coles. In fact, yeah, you can see all staples down. So probably the 12, 13 biggest staples are all down. So definitely weakness in consumer staples today. And the ASX 20 up 0.28%. So you can see the difference between the banks and the ASX 20. And yeah, I would say all four major banks are up pretty good. Maybe BHP, Woodside, all down. Mining companies down. So let's have a look by market cap. And yeah, CBA 1.26%. Westpac up 1.59, NAB up 1.84, ANZ up 0.72, BHP, CSL both down, Macquarie Group down, Goodman Group down, Wesfarmers up. So yeah, our rally today, maybe not rally, but our good day today, maybe surprisingly good today, has been led by the banks. Wouldn't be surprising if they're down big tomorrow. Who knows what's going to happen overnight? That's a problem we are facing right now. We just don't know. There's a lot of uncertainty in the world. Okay, so let's turn our attention to the top gainers. And we'll have a look at top gainers by turnover. A company called Errawarra Resources up 103.85%. On okay turnover, fairly small company, market cap 5.1, even after the 100% rise. A lot of times I would just sort of ignore when I see this sort of rally, but it's up over 100%, so I need to have a look. And what have they released today? They have made an acquisition and a $3 million placement. Acquisition of Elizabeth Hill Silver Project. I won't go into detail about this one, but if Elizabeth Hill Silver Project is near or has been in production, maybe it's been sold by a big mining company, those are my favorite types of acquisitions. Maybe I will open it up. I love it when little small mining companies acquire a mine that has been in production And the big miner goes, wow, it's sort of pointless us having this. It doesn't really provide us with any value, but it does provide a lot of value to the small mining company. Anyway, so they've made this transformational acquisition, and it seems like the market agrees, up 100%. 180 or square kilometre tenement package located in Western Australia. It's just a tenement package. So this is not my favourite type. Oh, no, wait, I lie. I was going to say this is not my favourite type of acquisition because it's not a mine that has been in production in the past, but that's a lie. This is a mine that has been in production in the past. Historical production of 1.2 million ounces over only 1 year of operation, ceased mining in 2000 due to declining silver prices. So this could be, in fact, an interesting acquisition. How long would it take? Oh, they're going to be renamed as well, West Coast Silver. Not sure what Errawarra was mine, or what's a word for? Mining exploration. Not sure what they were exploring for, but looks like they've transitioned to silver. This could be good acquisition, and they'll be known as West Coast Silver. Maybe they should be called West Coast Eagle Silver. Anyway, I might go through this in finer detail because this is this sort of acquisition I actually do like when small mining companies make. So I can sort of understand why the market is a little bit excited about this one. So let's have a look at Errawarra. And the chart, yeah, we have seen a little bit of selling, which is understandable, but this could be transformational for the company. So there you go. This is why I go through this process every single day, because sometimes I miss interesting announcements. Frontier Energy up 30% on pretty good turnover. This is a slightly bigger company, and we might as well have a look to see if this company released anything, because who knows, maybe this company released something really good as well. We're in the closing auction. Waruna Project Selective Capacity Investment Scheme. I can definitely see why I bypassed this announcement. It just doesn't sound exciting to me, but obviously the market likes it. Share price up 34.7%. Let's have a look at the chart. Is this a chart to get excited about? And that is something else I'm looking for. I'm looking for any sort of breakouts. And, ooh, gee, something bad happened to this company late last year. Anyway, I think we can move on, but yeah, I think we can move on. And let's move it down. Fairly small turnover, fairly small companies below Errawarra and Frontier Energy. And I'm not seeing anything of particular interest, although HIQ, High-Tech, they did release something that made me pause for a brief second. So let's have a look at HITIQ. They did mention something about consumer market shifts. This company shifts to consumer market with VAFA partnership. I did not open up. I just saw the title, and then I moved on to the next thing. HIQ, they do delve into brain injuries for athletes or something like that. Concussions. I forget exactly what. But whenever I have had a look at their, say, quarterly report, I haven't found anything to get me excited just yet. So let's have a look at the most recent Appendix 4C. $143,000 in receipts, up or down from a little bit from the previous quarter, and cash flow negative by 2.4 million. So obviously nothing here to get excited just yet. But this could be maybe a shift, although they use that word in their announcement. So obviously I'm just using that word because I saw it with my eyes there. But consumer market, that was the two words that caught my attention, but I did not open up the announcement. Okay, let's have a look at the top gainers by market cap. See what's in this list. So MinRes up, Autocell up, Novonix, Electro Optics, AMA Group. I don't remember any company releasing anything. Gorilla Gold Mines did release something. I'm pretty sure they didn't. No, they did a couple raising. Gorilla Mines. I'm just going to confirm that. Typically, when a company does a couple raising, I just move on. Yeah, $25 million institutional placement. Share price up. So this is a good sort of placement. Good sort of couple raising because the share price is not down. Price at 38 cents. The market likes it. That's good. It's good to see that happen when the share price rallies after couple raising. But we can move on. And what else? That's about it. Aries Resources. I had a quick look at their results for the last half year, and I actually didn't mind them. I thought that was pretty good. And with copper prices going through the roof, maybe I won't. Well, maybe we're not there yet with copper. but copper prices might go through the roof. The share price of various resources is rallying. So let's have a quick look at this chart. This chart could be starting to look a little bit more interesting. Company I've traded in the past. Not there just yet with Aries Resources. Sorry. Okay, then that's all I got for top gainers. Now to top losers. I know which company will be near the top. Now, it depends on small companies down a fair bit, but more than likely Helia, I think it's called, should be down a fair bit. And there it is at the top of this list. Helia Group down 25.77%. Losing a contract with CBA. This is in my top 5 stocks of the day. In fact, it's the top stock of the day. I did not do a standalone video on the top stock of the day. However, I did do an ETF video on AQLT, 16 minutes long, because I did go through quite a few of the companies within that ETF, which I think is very useful to do. Otherwise, Green HY2 went up a lot on Friday, down a lot, so I always ignore those sort of instances or occurrences. Austin Engineering, that's also in my top 5 because of this weird trading late on Friday. Share price down 16.96%. James Hardie, also in my top 5. Share price down a fair bit on an acquisition. Market doesn't like that. Regal Partners down 14.13%. I did actually go through Capital Brief, and there was mention of Regal Partners. There it goes. Regal Partners shares tank as Opthia warns of funding concerns. There you go. I'm not sure what this means. Was there any announcement? No. So obviously, Opthia have raised some concerns and the share price is down. Let's have a look at Regal Partners. Because the share price, well, the chart was looking, I was going to say the chart was looking okay. I was trading this. I got out so I can get rid of that price. I was trading this. I got out way too early, took a nice little profit. And I did not realize the share price the chart has absolutely tanked over the past month. In fact, it's gone from like above $4 to $2.43. What's been happening? Pretty sure there was a takeover bid for this company. I don't know. Anyway, interesting goings on with Regal Partners. Okay, let's move on to the top losers by market cap. We're going to see James Hardie, Bellevue Gold. What's happening with Bellevue Gold? I'm pretty sure I saw something in Capital Brief as well. Bellevue Gold shares sink as VanEck sells 1.5%. It's 1.5% stake. People just panic. This could be an opportunity to buy some Bellevue Gold on this panic. The chart was turning around. Stupid VanEck, just selling stuff. When the chart was turning around, gold prices are still rising. Opportunity maybe to buy some Bellevue Gold, if you like. Meta Group down 8. Not know why. I didn't see Meta Group in any announcements. No, could be just noise, or maybe something else. Helia, Real, Clarity, all over the place. Synlait Milk, I'll talk about that company as well. Also, there was a question about Synlait Milk, Smart Parking down, and Findy down again, 7%. That's really interesting because they did a capital raising. They released a really good announcement, then announced a capital raising. Talked about that already. Share price rallied on that, and share price has dropped the last 2 trading days. Not sure what's happening with that, but there you go. That can happen in those sort of situations. Okay, now what I'm going to do is go to the top 5 stocks of the day. There's no other company I really want to talk about. There was a few other sort of interesting announcements from Korea talking about the Department of Defense being dismantled in the United States. It's got Department of, did I say defense? Not Department of Defense. If I said defense, not the Department of Defense, Department of Education being dismantled in the United States, but it's going back to the States and I think the local jurisdictions. It might be better for students, although I did hear a lot of the funding for disadvantaged or disabled students is going away, which, if that is true, that's a horrible thing. Anyway, so Korea, and the other one was Aurora 3D. I think it's Aurora 3D, A3D, Aurora Labs. They did release something interesting. Share price down 10.45%. Completion of next generation micro gas turbine. I actually did have a look at this announcement because that sort of does interest me. And I found it intriguing, but share price down. So there you go. And the other one was Vection Technologies. This company keeps releasing announcements like signs, all these partnerships, new deals. You can just see them in the last month. A few deals here. And even though all these deals are really small, they all add up. They all add up. Sort of like Pro Medicus. numerous deals, not quite as big as Promedicus, but still quite a few deals this company has announced, all small, but they all add up. $4 million defense contract award. Now, the problem with Vection is the share price has been highly volatile the last 4 months or so. Yeah, it got as low as 8 or 0.8 cents back in September, October. Went from 0.8 cents all the way up to 4.4 cents. Now it's back down to 2.3 cents. And I'm wondering if this is a good buy the dip situation for Vection Technologies. I might wait for the next Appendix 4C, but I do think if the management can control their spending and become operating cash flow positive at the very least, this company does look really interesting just because of what they're doing. Okay, so now let's turn attention to the top 5 stocks of the day, starting with Austin Engineering. Share price down 17.86%. You notice, indicated price. And this is a response to what happened on Friday, not during trading on Friday, during the closing auction. So I did receive an email in regards to, I might as well just, so Peter Ziguris, I'm sending this email as I didn't know how to send an image via YouTube. Some weird trading in Friday's closing auction in Austin Engineering. Screenshot was at 409, showing one huge order at 400,000, putting the closing price up 24%. It wasn't part of any index change and is only in your odds. Maybe it was a fat finger error. So let's see what happens on Monday. Well, we can see what happened. And here is the screenshot. And this is a beautiful screenshot because it shows you exactly what can happen in the closing auction. Maybe it was a fat finger because someone put in one buy at 56 cents. And I would assume that was supposed to be 46 cents. That's what I'm thinking right now. But you can see there was one big order at 46 cents. So I don't know what's happening. And that one little trade pushed the share price of Austin Engineering in the closing auction up 24.14%. No, 24.44%. So it has to be an error. It has to be because why would you do that? All they had to do was put it 0.465%, and more than likely they could have got the shares at 46.5 cents, not at whatever 56 cents. Yeah, so it had to be an error. Probably an intern. I don't know. And then we've seen what happened today. Share price is back down to 46 cents. Yeah, so that's understandable what's happened. And someone's getting it. Well, no. Closing auction has just completed. Share price has closed at 47 cents. So it has to be an error. Has to be. I'm so happy that Peter sent me this email, and I'm so happy I actually looked at my email. It wasn't on purpose. It was really weird. And the funny thing is, I actually did see this. I go through all charts, not all charts, but a lot of charts I go through on Friday, and I saw this. This happened on my screens as well. And I didn't see any announcement from the company, really low volume. And I was like, what's happened here? And then I moved on to the next one. I didn't look at anything. And so I'm really happy with this particular email from Peter. And if you have a look at the 1 minute chart, you can see this little spike in volume, at the end of closing last Friday. And that was it. Share price. Actually, no, wait there. In fact, you can't even see it in this chart because the share price closed at, 55 cents? So in 1 hour, the first minute of trading, share price opened at 47.5 cents. So whoever, and I'm assuming it's an error. Now, I know to make assumptions is to make an ass out of you and me, but we have to make an assumption. This was an error. If it wasn't an error, what the heck were they thinking? An absolutely stupid move, whoever put that in. Unless it was an intern, and then they can learn from their mistake, but they're probably fired straight away if interns can be fired. Anyway, so interesting goings on with Austin Engineering on a Friday. So thank you very much, Peter Ziguros. Sorry, butchering your name. Ziguros, is that Greek? I have no idea. Coming in number 4, we have Compumedics. Share price up about 8 to 10%, 9.38%. I did receive emails from, that's not it, here it is, from Shares in Value, East Coast Research. And I've noticed this now, this happened 3 times, and once it could be just coincidence, 2 times, or maybe coincidence, 3 times, no, it's not coincidence. So I've noticed now 3 times in a row, whenever I get an email from East Coast Research, when they're talking about a company or initiating coverage, you usually see a bit of a share price pop up. Now, unfortunately, you can't really take advantage of this because share price opened up immediately at 35.5 cents. So you can't take advantage of this, but it is interesting. And if a company or a research broker has this power, they could manipulate the market. I'm telling you right now, they could manipulate the market. They could be wanting to get out of Compumedics, and they just put out a report. We're initiating coverage, Rio owns some shares, and the share price pops up, they sell all the shares. Anyway, initiating coverage of Compumedics with a fair valuation of 67 cents. Didn't go through this, download full report. I wonder if I can have a look at the full report. I never go through these full reports. They're more than likely done a DCF, that sort of thing. There we go, valuation range of 50 to 83 cents. So they've got a valuation range. It's pretty obvious what they've done here. So they've probably used, DCF methodology. They've put in all these different numbers into the DCF, and they have a range, 50 to 83 cents. Halfway in that range, the middle point in that range is 67 cents. So that's their fair value. That is my problem with DCFs. In fact, if I did a DCF for Compumedics, I'd probably have a range of like 20 cents to $5 because I just have no idea what's going to happen in the next 6 years for any company, let alone this company. And who knows? I wouldn't even know what's happening in my own life. So they do have revenue growing or doubling over the next 5 years, and significant growth in EBITDA and net profit. And P ratio 6 times by 2030. And more than likely, it won't happen like this. I have had a look at these sort of reports in the past, and I went back even further, had a look at how accurate these sort of reports are, and they're not very accurate. And the great example, a perfect example of how bad this sort of thing can be, happened a few years ago with Nvidia. I went to a website, I forget what it was, they've taken it off the website because obviously they were so wrong. So this person was saying Nvidia was significantly overvalued. I'm going to have a look at an Nvidia chart. I'm going to have a look at an Nvidia chart, and I can tell you almost exactly when it happened. So it happened in April 2023. Share price at Nvidia at that point was $30. I think they've done a share split or something. So at that point, this analysis was saying that Nvidia was one of the most overvalued companies in history or something ridiculous like that. And they actually did a DCF. And he actually provided the numbers for the DCF for the next 10 years. Up until 2032. So starting 2023 up to 2032. He was not only wrong within a year, his 2032 free cash flow for Nvidia was, it's obviously going to be, well, may not be, but his 2032 cash flow for Nvidia was lower than the cash flow Nvidia produced in 2024, the 1 year later. He was already out. So they took that down because they were so out. So that particular analysis had no idea the potential growth for Nvidia in a 1 year period. He was so far wrong. So I'd love to hear his thoughts about Nvidia. In fact, I heard that Nvidia's PEG ratio currently is at 0.3. So obviously the market does not believe the growth potential or the growth forecast for Nvidia. Anyway, so that's what I'm going to talk about when it comes to that. And just the dangers with these sort of research thingies, whatever you want to call them, papers, I don't know. Anyway, so let's move on to company coming in. It's by the way, chart for Compumedics, yeah. Chart for Compumedics. I did have a look at this company because they did release something. Was this company in my top 5 on... Yeah, this company was on my top 5 on Friday, and they did release something that did intrigue me. So this company, I'm a little bit more intrigued by Compumedics than I used to be. And so even though the chart is not making me do backflips, I definitely have a little bit of more of a good vibe about this company. And did I actually put this into my watch list? Let's have a look. I don't know why can I not put? Oh, it's probably already in. It's probably already in my watch list. That's right. Yeah. Anyway, let's move on to company coming in at number 3. We have James Hardie. was going to include James Hardie in my top 5, even if the share price wasn't down 14.53%, because they've made a pretty big acquisition. This is a pretty big, huge acquisition. So James Hardie and Aztec to combine. So not the Aztec culture, whatever that's called, Aztec. It's spelled differently, for those who don't know. And I'm pretty sure that Aztec culture has already gone bye-bye. I could be wrong. Maybe there's still a bit of Aztec culture in Central America. Anyway, this was a huge acquisition. I didn't realize how big this acquisition was until I read. Yeah, here it is, down here. I didn't really go through this. The thing that pees me off about these sort of acquisitions, will you ever see an acquisition when the company doesn't mention synergies and doesn't mention it won't be or will be EPS accretive? Every single acquisition, they always talk about synergies, and this acquisition will be earnings per share accretive to shareholders. Of course it's going to, well, of course you want it to be, because otherwise why would you be doing the acquisition? Now the problem is a lot of these sort of acquisitions don't work out. Research has been done on this. I did this research many years ago, that the bigger a company is, the more likely acquisition will not work out for that company. There is a ton of research being done on this. So there is a greater chance that this acquisition for James Hardie, maybe it's a merger, I don't know, that this will not work. There's a chance this will not work. And I think one of the reasons why the share price is down is because of that thought. And a great example of this is Slater & Gordon, acquisition of, I forget who it was. It was an English law firm. It was going to be, it was going to be synergies. It was going to be EPS accretive. The market liked it, I think, if I remember correctly. We can't have a look at the chart because Slater & Gordon has been bought out. But it was an absolutely disastrous acquisition, and it destroyed shareholder wealth. Anyway, so there's a chance this will happen here. Anyway, so we can have a look at, they mentioned, I'll just show you. Additional adjusted EBITDA from synergies when fully realized, expected to be accretive to James Hardie's cash earnings per share in the first full fiscal year after closing. I never see any acquisition where they say, well, earnings per share won't be accretive. I'm sorry, and there's going to be no synergies. I'm sorry, we're just doing this because the CEO just wants to make an acquisition because he's power hungry. Anyway, I was shocked. I saw that first, all these bullet points, and I did not have a look to see how big this acquisition was. I thought this was a small acquisition. Anyway, James Hardie will acquire Aztec for a combination of cash and James Hardie shares with a total transaction value of $8.75 billion. I wonder if that's in US or Australian dollars. I'm assuming that must be in Australian dollars. No, it must be in US dollars, including Aztec's net debt of approximately $386 million. Anyway, so and they're going to be listed on the New York Stock Exchange now. I thought they already were. Anyway, let's have a look at ASX chart, because this is a listed company. ASX. I've never heard of this company before. First time I've had a look. Is this a high quality company? Let's have a look at the weekly chart. It's only been listed for a few years. It's probably too little time to really judge how this company has performed. Anyway, so the market doesn't like it. I'm not the biggest fan. There was something mentioned here. Oh, the reason I knew how big this acquisition was James Hardie sinks after $14 billion US deal. Anyway, so let's have a look at the chart for James Hardie. Is the market overreacting? Oh, by the way, we can actually have a look. James Hardie are listed on the Why were they talking about being listed on the New York Stock Exchange? Anyway, this is a chart. James Hardie share price has dropped. Notice there's a fairly big drop on Friday, by the way. Right there. Oh, that's the weekly chart. Michael. Oh, look at that drop. Leading into this acquisition, a fairly big drop the last 3 trading days. Is that a coincidence? I'll leave that up to you. So not the best looking daily chart. Now, if you have a look at the weekly chart for James Hardie, and you go back far enough and put in the 200-week moving average, there is definite a definite argument this company could be high quality. So over the last 13 years, over the last 13 years, it came out of its doldrums, and the share price tends to stay above the 200-week moving average. And where the share price does drop below, that is good buying opportunity for this company. And what has happened today? It's fallen below the 200-week moving average. So this could be good buying opportunities for this possible high-quality company. That's the big question. Is this company high quality? What I might do now is just have a look. I'm pretty sure I've done this before with James Hardie, and I came back with the conclusion that this could be considered a high-quality company. So revenue per share growth over the last 10 years, 9.2. That has been slowing over the last 5 and 3 years. Earnings per share growth over the last 10 years, 19.3%. That also has been growing. That could be concerned. Return equity, 32.1%. Return invested capital, 15.4%. Gross margins at 39.5%. So definitely an argument that this could be high quality. Now, I might change my tune just a little bit based off the growth. I might want a little bit better growth, and has pulled back the last few years, but maybe that's because the last 3 years have been fairly weak. Don't know. Anyway, so let's move on to company coming in. At number 2, we have Synlait Milk. Released half-year results, share price down 12%. Ooh, and the question is, because I am trading this right now, so the question is, and there is a question, Big Boy Baby says, are you maintaining your Synlait milk trade after today's negative reaction to half-year results? So I'll talk about this in a second. Their results were not bad. In fact, their results were pretty good. So why do I say that? If we have a look at, was it the presentation? Their results beat expectations or guidance. Yes, their results beat guidance. And I'm going to want to show you that right now because they mention it somewhere here. Where is it? I've got to find it now. It may not have been in this particular announcement. It may have been in the shareholder letter, maybe. And yeah, now I'm going to have to find it. Can you believe that? No, here it is. So yeah, here it is. Found it. Progress. $63.1 million total group EBITDA, just above the guidance range of 58 to 63 million announced in January 2025. So as soon as I saw that, I went, this is a beat. So share price should go up. Should. But there's one also very important thing you have to know about results, particularly half years. They might have a trading update, and they also might release guidance for the full year. And there was some weak, and I'm trying to remember where this was. Yeah, here it is. So in the full year 2025 guidance, there was some weak language in this. I'm going to call it weak language. Here it is. So whenever you see a however, so things are going well, but they start the next sentence with a however. However, financial progress made in the second half of financial year 25 will be slower than the first half as Synlait balances several opportunities and risk related to milk stream returns and foreign exchange and delivers ongoing operational and cost improvements. Now, they are targeting a pretty good or nice decrease in net debt. Now, and I think that weak language would have probably led to some of the share price weakness. But the other thing is, and this is also just a slight possibility, they were operating cash flow negative. Here it is. So operating cash flow negative by $12 million. So that could have caused a little bit of a panic, but they do explain it. They do explain it in one of these slides. Here, no, it's not that one. They do explain it that there is seasonality when it comes to cash flow for Synlait milk, and typically the second half tends to be much better in terms of cash flow. Here it is. So operating cash flow is improved by 86.1 compared to this half year 2024. Operating cash flows are typically low in the first half of the year as inventories build up to be sold down over the second half of the year. Despite the improvement, overall operating cash flows were negative. And you can sort of see that in this net cash from operating activities, the last 5 half years. Oh, no, you can't really see it. That's only half years. I'd like to see, in fact, we can do that. We can do that. Sorry, we can do this. Synlait milk. Doesn't matter if I'm looking at the New Zealand, I'm just looking at financials. And what I want to look at here is operating cash flow on a half-yearly basis. Hopefully they have it. Sometimes they don't. And operating cash flow, and you can definitely see some seasonality here. Yep, you can see some seasonality here. We haven't got the most latest in. Now slightly negative, -12, but definitely you can see some seasonality. And always, the second half is by far better than the first half, except for that year, 2022. But 1 year ago, this company had operating cash flow of 50.9 million in the year previous, 163.7 million. So more than likely, you're going to see significant operating cash flow and free cash flow for Synlait milk in the second half of this year. So hopefully the share price isn't down because of that. So I think it's just because of a little bit of weak language in their outlook, which is okay. I don't mind that. They could be being conservative, and I think that's the right road to go down. Be conservative when it comes to outlooks. Now, let's have a look at the chart and the question, am I selling? And I will be honest, I have thought about it. I did think about it. Now, I am up 100%. Oh, what's happening here? No, I don't want to change interval. I want to change ticker code, SM1. So I bought at 44 cents. So at 88 cents, I'm up 100%. And I was thinking, ooh, I could sell at 88 cents. Share price, even though we did see a bit of a drop today, we did see a lot of selling. So most of the drop today was on open. And then we saw the share price go sideways through the rest of the day. So, and probably maybe, yeah, there was a bit of selling just before closing auction. Share price was actually at 84 cents just before closing auction. And there's one trade that set the share price down from 84 to 80.5 cents. So it does look like it has found support above 80 cents. And the other thing is, it's not a sell. This is not like a trend killer at all. This is not the sort of one-day counterstick that would be defined as a trend killer. And maybe all the negative sentiment has been already priced out. If you have a look at the New Zealand Stock Exchange, Synlait milk is on that as well. It's probably not SM1, it's probably SNL. And it's down 12%. So fairly similar trading between the two. And by the way, you could tell share price was going to drop on open because Synlait milk on New Zealand Stock Exchange was down about 10% when I first had a look at it. Anyway, so that's Synlait milk. And at this point in time, yeah, I might just hold on for a little bit longer. And just because we might see the share price rally a little bit more, maybe all the negative juju has gone out today. All those who wanted to sell out have sold out. Okay, coming in number one, a no-brainer. Definitely would have been the stock of the day. Helia Group, share price down 25.57%. Now, let's go back 9 months. Let's go back 9 months to June. I think it was June 19. I could be a little bit out. Let's see how out I am. Oh, look at that. On the 19th of June, my father's birthday, by the way, 5 days after my birthday, hint, hint, they released an announcement called Update on CBA Contract. And on this day, the share price for Helia dropped. How much did it drop? 20%. 19th of June. Share price dropped 20.85%. However, the following day, the share price actually rallied 16.2%. And share price recovered fairly quickly. We'll have a look at the chart in a second. But this particular announcement was in regards to the CBA contract, and that the CBA was sort of like going to tender the contract or something. They use weird wording here. I don't know. I'm not a lawyer. Has been advised, or Helia has been advised by CBA of its intention to issue a request for proposal relating to its external lenders' mortgage insurance requirements for the whole CBA group. I'm pretty sure request for proposal means we might want to see if there's someone else who we can go into business with. Anyway, today we had, oh, by the way, I should also mention I think it was Macquarie Group put out a sell or something like that in regards to Helia because of uncertainty when it comes to this particular contract. And the reason I know that is because it was in Capital Brief. And so is Helia disappointed? Of course they're disappointed. What else are they going to be? It may not have been this one that I saw. Yeah, here we go. Earlier this month, Macquarie downgraded Helia from neutral to underperform, which I suppose is a sell, partly due to risk around its long-term contract with CBA. Helia was advised, now we're getting to today's announcement. And Helia has been announced today. You can sort of obvious what this announcement's going to be. I did see this one, update on CBA supply and service contract, and my first thoughts were, they've lost it. And yes, they have. Helia Group, or they've been advised by CBA that as part of this process, it has entered into exclusive negotiations with an alternative provider for the provision of LMI, which is Lenders Mortgage Insurance, services to the CBA Group. And this would be a fairly big hit for Helia. The LMI business underwritten under this contract represented approximately 44% of GWP, which is gross written premium. So you can definitely understand why the share price is lower. So obviously CBA was a big client of Helia. And this really underscores the importance of understanding a business, if you hold a company for the long term, or even for the short term, that particularly if a company has, what's the word? What's the opposite of concentrated? That's the word I was looking for. If a company has concentrated clients, that can really harm the company, because if they lose one of those clients, it can be terrible. Have a look at BSA. They lost their contract with NBN and the share price dropped 90 to 95% because they were so concentrated in the one client. And particularly if that one client is a big client, a big company like CBA, that can be, CBA doesn't care about you, doesn't care about Helia. They don't care about the 50-year relationship between CBA and Helia. They don't care about that. They just understood that this other rival could give them better margins, more financial windfalls. Who knows why? But anyway, so Helia share price down a lot. And let's have a look at the chart. And this is really interesting because the share price, Helia just went ex-dividend. They had a really big dividend. That's why the share price dropped 15.9% on Wednesday. If we go back further enough, you can see that massive drop in the share price on the 19th of June, then a recovery. So recovered almost immediately. So seems like the market went, okay, there's this risk here, but is it really going to happen? And the share price rallied. It was a nice little rally. I participated in this rally. Nice little rally. Share price popped up on the results, up 17.15%. They're also going to go ex-dividend. That's probably why some people were buying as well. And then the share price has dropped all the way back down to where it was on the 19th of June, 2024. I'm surprised it hasn't gone lower than that. The low on that particular day was $3.34. And I'm a little bit surprised it hasn't gone that low. The low today is $3.44. So I'm a little bit surprised. I thought it was going to go lower than that. Okay, so that's Helia coming in at number 1, stock of the day. I was going to have a look at one of your comments, but I suppose I've already done it with Big Boy Baby. There you go. Thank you, Big Boy Baby, for leaving your comment in the comment section. I will release my video on AQLT, where it's called. AQLT tonight on the 24th of March. 16 minutes long. I didn't realize it was that long, but I did go into a lot of the companies within the ETF, which I do think is important. So if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.